So the last thing we're going to do as part of the liquidation model is figure out proceeds by entity. So we're going to do that by referencing the number of shares that those entities have on the cap table, and then divide them by the number of shares in their class, and then figure out what their exact proceeds would be in each of these waterfall scenarios. So let's do that. Not overly difficult, but we'll walk through it pretty slow and make sure that everybody gets it, because this is the money one. This is where you can see how much you're going to make. If you're an investor, if you're a founder, anything else, this is the one everybody cares about. So let's do this. We'll start with the CEO. So the CEO has how many shares of common stock? We'll go over here to the cap table and see the CEO has 333,333 shares of common stock, and there is 1 million shares of common stock outstanding. Put that in. And so that means that 333,333 divided by 1 million gives you the percent of the distribution the CEO receives from the common stock. And the common stock didn't make anything here, but that's what it'd be multiplied, the common stock distributions. And that's all there is to that. So we'll do the same thing for the CTO and the COO. Here. So the only thing that's changing in this formula is the numerator in the first part of this equation. Okay, COO, doing the same thing here. Boom, that's all there is to that. So for the convertible debt angel, we're gonna do almost the exact same thing, except just reference a few different cells. So we're gonna go over here and see how many shares does the convertible debt angel have as part of the series seed, right? If there was additional investment going forward, we would group those together and in each share class, and then you could sum them up in a different column or a different part of the spreadsheet if you want, but we're determining distribution per share class per entity. So we have the convertible debt investor has this 46,271, and we're going to divide that by the total shares from the series seed investment, and then we're going to multiply that by the distributions to series seed, still 0, and that's how much the convertible debt angel has. Then we'll go into the lead angel, which the lead angel has this 179,758 divided by the same thing, this 226,030. Lock those in. I'm trying to keep up with locking my cells in so I don't have to keep saying at the end we got to lock certain cells in, just trying to make it a little bit easier to follow. And then multiply that by the distributions here. Okay. So now we go on to the Series A, and so we have the VC from Series A, and the VC from Series A has this 299,579, and we'll divide that by the Series A shares up here, and multiply by the Series A distributions right here, and that one's not locked in. Okay, so now if you notice, there is the lead angel made a follow-on investment in the Series A round, so we need to go ahead and account for that. And the way I'm going to do that is by adding that lead angel in the Series A proceeds by entity, and so they could just be added up at some point to see their total proceeds from the sale of the company. So for the lead angel, I'm going to go ahead and do this in column B since I didn't do this beforehand. So in the lead angel, we have 14,978 shares that they received as part of the Series A investment, and we're going to round that out up here, Series A, and divide that by, not divide, we'll multiply that by the proceeds given to Series A, right here. And then just to keep this even, we'll drag that over. And then the Series B investors, 474,027 divided by the number of shares in that total round, multiplied by the Series B proceeds. $10 million, that's what we're looking for. And let's drag this formula over to here. Make sure that looks good. I like to format all of mine comma style and then take out the extra decimal places. Okay, and now we just have the employees. So the employees will be like this. They will say the remaining Series Seed options, still doing it the exact same way as we have been, but they're way over here, the remaining Series Seed options, divided by the total options up here, multiplied by the proceeds to the options here. So I think you get it by now. Pretty simple stuff. We'll finish this out real quick and we'll be done. So same thing for this one. Gonna kind of speed it up a little bit here. Okay, so now at the end, what we want to do is we want to sum everything that we just did to make sure that it all adds up correctly too. So we want to sum all the proceeds by entity all the way up to the CEO up here. $10 million, that's the number we're looking for because that was the sell price of the company. And I'm just going to put another quick check figure in here to make it easier to reference. So if C85 equals the company sell price up here, then we'll just say yes this time, otherwise no. Okay, so that looks good. Go through and make sure that I'm good to drag over. I think I'm good. I was fairly diligent with that one. Okay, so let's drag over one more. And it looks like we check out. So you can see that in the sale of the company for $300 million, the CEO received $42 million under these scenarios, where the Series B, the VC2, get about $60 million. And so that's a little confusing. Notice my labels are a little bit off. And we can fix that just by doing this. The VC2 up there, lead angel. There you go. And I'm going to insert that row. Say Series B investors. Keep it the same. So that is it. I think that wraps up this portion of the course. That is the liquidation model, the waterfall analysis tutorial. And I hope that you get it, you understand how this all works. And next we're going to move on to adding anti-dilution shares into this model, and which they will mainly affect the liquidation model. And we'll see how to do that and go through that next. So thanks.